Well, welcome to Beers with Rich. I'm Rich, Head of Investments at Under the Radar Report. It is great to be back. Today, I want to talk about where small caps have been and where they're going, or at least where we think they're going, with the added bonus of some tips. Look, we've been through a bit of pain, that's for sure. That's inevitable when interest rates go from negligible rates to 4% plus. Across the term. So we've had a bit of a shock effect across the equities investment class, in fact across all assets, and some stocks have definitely been left in the dry dock. So the small caps index has declined about 4% in the past 3 months. The ASX 200 has declined about 2%. But I guess the more relevant point is that the variability of stock moves has blown out. So the difference between the winners and the losers is much greater than at any other time that I've certainly seen. It's at historically high levels. So what does that mean? That means picking winners and getting into good quality stocks has never been more important. And I would add that it's never been more important to own a diversified portfolio, because that is how you reduce your risk. But look, what we've seen over the past couple of years is at the start we saw a perceived flight to quality. So we saw a lot of money shifting out of small caps into blue chips or into big caps. That's for sure. One of the factors being that there's the perception of risk is that is much lower at the big cap end of the spectrum. Also, we've got the ability to get out of big caps is much easier. So there's a lot more liquidity. So they're getting a liquidity premium. But there is a silver lining to all this. What is that silver lining, you might ask? Well, the worse the performance, the greater the opportunity in the stock market, which is over the next couple of years. We're going to see some big money being made. We're already starting to see that. So don't take my word for it. Look, small cap funds are raising money. So other fund managers see the opportunity. Also, the Future Fund, Australia's sovereign wealth fund, is allocating money to small caps. I mean, this is certainly the first time I've seen this, and it took me by surprise. But broadly speaking, money is shifting back into stock picking, or back towards stock picking from passive investing or investing simply based on the index. So it's a good thing. The point is that if you do your research, you can double your money and more. So we've quadrupled our money on the utilities software New Zealand company Gentrack, GTK. So that's just one example. And that is an example back in the day of a single digit PE company coming good, and now you've seen a multiple expansion and an earnings expansion, and who knows where this stock could go. The point is that right now we're seeing quality small caps on single digit multiples, on single digit PE multiples, and you won't get that at the big end, and you'll have hardly ever seen that at any other time at the small cap end. And the point is we're going to roll out like 15, 20 stocks in the next 2 issues in our Under the Radar Report publication, outlining these single digit PE small caps and why there are great opportunities. I mean, with Gentrack, we picked that alongside other, 3 other turnarounds at around the same time. I think 2 of them come to mind: Integrated Research and Paragon Care. Now, those 2 other stocks had times where they started taking off, but they've since come back to the pack. But if you invested in all 3 of those companies, you would have made a lot of money, because your returns on Gentrack have been so outsized and your losses on those other companies are minimal. So that is what investing comes back to. It's buying cheap and being patient. I cannot emphasize that enough. So, Charlie Munger, of course, you'll be aware, died this week. He would have known what I'm talking about. As you'd be aware, Charlie was Warren Buffett's business partner. When Munger and Buffett started investing, they were hardcore value investors. This is just after the Second World War, or around that time. They were really into value, and there was a lot of value on offer. But Buffett has credited Munger for opening his eyes to the possibility of growth investing, because you needed to transition over time. There wasn't always going to be that situation where there was just value on offer like it was when they first started investing. So in small caps, you get both. That's the great thing about small caps. You get value situations neglected by the market at bargain prices. So that's what we're seeing. But you also get high quality growth. You're getting high quality growth stocks with long runways at reasonable prices. So that's what we're trying to do in small caps. We're trying to get into a set of stocks that had this great potential early on. And that is the opportunity to get in early on, because if you get in early, like Warren Buffett said, you'll never have to sell. Well, obviously, life takes charge, and we do have to take profits, because we're not all in the ability of never selling. But the point is that if you get onto something good, it will serve you over time. That's why we love value investing, and that's why value investing wins over time for the retail, for the small investor. So let's get to the beer. We're going back to basics here. White Bay Crusher. So this is from up the road in White Bay. Let's crack it. It's like it says on the tin, Crusher. It's what we like here. Cheers, and I look forward to talking to you again soon.